where do we go from here? Joining me now, Brian Belski is Chief Investment Strategist at BMO Capital Management. Julia Coronado is founder of Macro Policy Perspectives. And Subhadra Rajappa is head of U.S. rate strategy at Societe Generale. This is our Fed Power Panel, so it's great to see you guys again. Brian, I'll start with you on stocks specifically here and expectations for the Fed's announcement. Let us not forget, even if they don't do anything new, they're still pumping a ton of liquidity into a market that has roared back from the lows with an economy that's still growing and a vaccine that's being administered now.
Right, Kelly, and thank you for having us. That $80 billion number continues. I think the Fed has basically done two very, very big things. It's not what you say, it's what you do. They've been very clear that they stand at the ready. And this notion, what happened in August, was a really big deal in terms of changing their focus from inflation to unemployment. And I think that really set the market ablaze in terms of higher prices. Now, going forward, clearly on a near-term basis, it's about stimulus and what we're going to see from Mr. Biden and Ms. Yellen in January, February. So this could be one of those things, one of these meetings where it would be the most meaningless meeting in an unprecedented year, as you said in the onset. But the Fed's going to continue to purchase, and I don't think they're going to see any big deviation from that program.
Right, but this is a huge program, Julia. So, you know, I think it's what, 80 billion in treasuries, 40 billion in mortgage-backed securities. You know, again, all of this was instituted when the crisis was at its apex. Although the case count is still bad, it's a very, very different economic situation. Is it still justified to keep these programs going the way that they are? And do you expect any changes today?
Absolutely, it's justified. We're still actually very much in the thick of the worst second wave that they had imagined. The vaccine is great news for the horizon, maybe mid-2021. But in the near term, we see the economy slowing. We see that fiscal support running out. We see activity shutting down because of the virus spread. So I actually do think that they're going to come to the table. Their asset purchase program is pivoting from market stabilization to monetary support. What we're going to get today is guidance that reinforces their commitment to continuing these purchases. And we do expect them to extend the maturity of their Treasury purchases as part of that pivot to monetary support.
Shepard Smith here. Thanks for watching CNBC on YouTube.